G'day expats, welcome to another episode. As always, I've got my co-host joining me, Jeremy Harper. Good morning, mate. How are you?
Very well, thank you. Looking forward to tucking some chocolate heading into Easter here. It's what are we? Thursday morning before the big weekend or the long weekend.
We are, mate. We are. I think the Ridley household this week has absolutely crushed too much Easter chocolate, unfortunately. So hopefully I don't have too much to crush over the short period because it just doesn't last in my household. I'm a sucker for dark chocolate and it just zips out the door too quickly. But
Yes.
mate, plenty on. Last night we had the PM address the nation. Uh, God, what a disappointment that was.
Missed opportunity. I actually did watch it. I turned on ABC, so I don't usually watch a lot of free to air TV, which I don't think a lot of people do, and
No.
tuned in and there's a lot said about nothing, right?
Yeah, I mean, I think it was a moment for the PM to cover ass, keep job, sort of moment where said a lot, but told the nation to keep going as is, act like there's no fuel crisis coming, but then also said, there's plenty of uncertainty. So it's almost like this compliment sandwich to a degree. I mentioned the bad stuff, but I'll say, but don't worry about it. Just keep going on as normal. Don't know fuel
Yeah.
rationing yet. So probably causes more confusion, I'd say, to the general public. But was that sort of that moment, canary in the coal mine, giving the nation a bit of a heads up that some things might be coming, but not sure what it looks like yet. But at least I've come out, I've addressed the nation, and it's a good way that I'll keep my seat in the meantime. So,
Yep.
yeah, it was very disappointing. I think a lot of people were expecting him to actually announce certain things, mandates, work from home mandates, like much like COVID or fuel rationing or some sort of new protocol or something along those lines, but nothing. So quite disappointing. We are seeing a lot of state governments move swiftly with like offering cheap, discounted, or even free public transport, which is
Yep.
really good to see, encouraging public transport. So we might see a bit more of that over the coming weeks. That'd be good. Obviously, that's going to cost the state government a lot, but it's good to see them being proactive, given that the federal government just doesn't seem to be doing too much at the moment. I think they're waiting until the budget can come. So the only thing they've really done is the fuel excise cut. So that's what we'll jump into today. A bit of a topic update. We'll talk about the fuel excise cut. What is it and why it matters? A bit of the RBA rate outlook and what it means at the moment for expat borrowers. And then lastly, a bit of a property update and how it's all tracking at the moment, given some
Yep.
recent figures coming out from Cotality, formerly CoreLogic. So let's jump into it. Thoughts on the interest rates where we're at the moment, Jeremy?
Yep. So, we've had the back-to-back increases. We're now sitting at 4.1. Now, I guess looking at the variable market where we're sitting, obviously there's slightly different rates between investors and owner-occupiers, but if we talk really about sort of an owner-occupier home loan, we're now seeing that high 5% on the variable rates. What's been really interesting is very recently, even this week, even the last fortnight, all the banks have gone, they've increased their fixed rates twice, pretty much,
Mm.
in the last couple of weeks. So very, very quickly, in
Yep.
a short amount of time. I don't know if they'll continue to increase them. I know before this, most people were sticking with a variable loan before this conflict and, coming to the start of the year. People have started to fix some of their rates, but just to kind of give you a bit of color around where rates are sitting now. So if we look at St. George, who as of the 2nd of April have increased them again this morning. So if we look at, say, a 2-year fix for owner occupiers, that's now at 6.2%, 3 years at 6.44%. So it gives you an idea that banks are now pricing in that fixed rate on the short term sort of 40 to 60 points higher than the variable.
Yeah, that's right. So fixed rates are a good sort of lens into what banks are pricing in over the next couple of years. I don't think we'll see a rate cut in the next 2 years. I think we'll see probably two more increases, to be honest, at least. So banks are trying to obviously provide a bit of a lens in that sort of 1 to 3 year fixed rate period based on those. So that's probably in line with where rates are going to be. So it's a tough one in terms of, well, do you ride the wave or do you fix?
Yes, correct. I think a lot of people want that certainty of repayment, in times like this. So if that's something that you want to do, you can look at fixing it, locks you in, it limits your flexibility. I would just say things do change quickly with the RBA. I'm
Yep.
going to stick my neck out here. I think there's a lot of repeat of what happened during COVID. And I just think the RBA governor, Michelle, she wasn't the top dog back then during COVID, but she was the number two. So she was in
Hmm.
the room.
Hmm.
I think some of this data is going to change, and not necessarily on the inflation. I don't think much is going to change around inflation for some time in terms of coming down and be above target. But I think other indicators will come through the economy. I think the RBA will start to look to cut towards the end of this year. That's my take. I'm sticking my neck out. So if
Oh,
that's the case, then you got to think about what does that do to if you're locking in the rates now at say 6.5%, and the market does move.
yeah. Well, I mean, if the market moves down at the end of the year, you're paying a premium, aren't you? So,
Correct.
and remember, you can't really, I think it might be good actually, Jeremy, to get you to explain, like if you try and uh, refinance a fixed loan before it comes to its term, what happens? Like how are you negatively impacted?
So the bank will have what you call a break cost, which is what was the cost of funding when you entered that and you settled into that fixed period, how
Yep.
long's left when you break it. So if it's 2 years and you've got 6 months left, size of the debt, and then the cost of funding when you're trying to break it for that bank. And essentially the bank's just trying to recoup that interest cost for the bank and charge that back to the borrower. So yeah, there can be a break cost. If that's the case in 12 months time and you do need to break it, you can always just call up your bank and get them to quote you what that looks like. It may not be significant. It may be quite expensive depending on what the market is.
Yep. Yeah, okay. And that's good. I want to now talk about that recent update about the fuel excise cut and what it means for a lot of Australians back in Australia. This doesn't really hit home or hit, I'd say, expats living overseas, but it mainly ties in well with the mechanics and I guess a bit of a political context and even
Oh
down
yeah.
to like that inflation paradox. So let's unpack what the fuel excise actually is first. So in Australia, wholesale, I suppose, petrol providers, or when petrol stations buy off wholesale petrol providers, they have to pay an excise tax. That excise tax goes directly to the government. It generally ranges. Previously, it was 56 or 52.6 cents, I should say. That's what they're paying per litre in terms of tax. So it's actually a lot, to be honest,
Hmm.
what they're paying. That recent update that we received from the Australian government, where they've come out and said, okay, we're going to cut the fuel excise by 26.3 cents, so pretty much halve it for the next 3 months going out to 30th of June. They've done this in the past, but in the past when they've done this, fuel retailers, petrol stations, the price of petrol has just gone back up again, like very quickly. And then it also means that fuel retailers, your Ampols, your Shells, all those ones just making more profit, to be honest. So they've come out swiftly and said the ACCC are going to really be hypercritical on and monitoring fuel retailers to make sure they're passing on the savings or the tax savings. But if the supply of fuel, petrol, diesel, jet fuel as well, continues to become diminished in Australia, then prices will just keep going up. So I don't think it's going to do too much, unfortunately. I think there'll be like an immediate sort of impact where you'll see it a little bit cheaper compared to a couple of weeks ago. But I also think between now, April and out to June, the fuel prices that we pay on average will continue to just keep stepping up, unfortunately. So it's short-term relief, but it's good to see I suppose, the government being proactive, but I think they're really sort of trying to look at what they might propose and give to the Australian economy in the budget, which is out till May next month.
Yeah. Yeah. I mean, I just think, look, half, why they land on half? Is that because what they put through last time?
Mm,
Why is it 3 months? Is it just to give you cover to see you over the budget period and
yep,
just to kind of see whether I just think it's very political. Why would they not just tie that to some sort of supply indicator?
yep,
Perhaps once,
yep.
once the average cost of the barrel of oil is within this certain range, we'll remove this cut. Why is it 3 months? 3 months just seems quite lazy and just, oh yeah, well, bit of a band-aid solution. I would have thought they could tie it through to say, okay, now that the supply has sort of sorted itself out, the fuel cost should sort of start to moderate. Now we'll remove or we'll increase back the excise. But interesting. So the way it's not really a cutout for the Australian consumer. It's more just, hey, we're reducing how much tax we're paying, and then on top of that, they're also charging GST on that. Correct?
Yes, yeah, they are. It's interesting about GST. A lot of state governments are talking about trying to give GST windfalls back to state residents. But yeah, that's right. So GST would technically be increased. So they're still benefiting to a degree because obviously they're generating more revenue off it because they're paying less excise tax. So they're still getting something off it. Um,
Yep.
I think the temporary measure, I think like there's a few things feeding into that. Like this with everything going on in the Middle East, the Strait of Hormuz, 20% of the oil comes out of there, obviously, but that's still just an uncertainty around the timeline on how that's going to be managed. More recently, Trump, especially this week, has said our plans to be out of there in the next couple of weeks, and then, ideally leaning on sort of a diplomatic way for countries in the region to open the Strait of Hormuz, rather it being a toll point for Iran to charge 2 million per oil tanker. So that much, and I'll say this, share markets love that kind of news. Recently saw them lift pretty aggressively, but we're not really out of the woodwork there. I think you'll see them come back down because I think it's going to be prolonged. But Trump is coming out today to give us all an update very soon, actually, in about an hour. But I think it serves two things: provides some temporary relief, so it keeps voters happy. The unknown measure right now of how long it might go, 3 months just seems like a sensible time. Takes us over the budget, so we might see more measures coming out of the budget. But it's a tough one. It really is for the government in terms of what they're going to do in the budget because very quickly this Middle East conflict could be resolved, but there is going to be this tail end of the oil supply shortages, which could take another 6 to 12 months to feed into economies. So I don't think it's going to be as punitive as what we all thought in terms of all these changes to taxes and other things. I think there'll be a bit of relief for small businesses, but not too much. It's really interesting. Labor's sort of more trending towards this sort of liberal side now, and liberals tending the other way. So it is going to be very interesting, but it's just this short-term relief, which I don't think is going to achieve much at all, just because oil prices, fuel, diesel, they'll still keep tracking up, unfortunately. So we'll
Yep.
just see. Saying unfortunately a lot because I don't have too much good news or much to say about the fuel excise cut. I just don't think it's going to do much. What about everything going on right now in the property market? We saw Cotality's numbers come out recently on the March month. Some interesting movements on the year to year and the month to month. What are your thoughts?
Yes. So if you obviously some of those small markets that have just continued to really power along. If you
Yeah,
look at the Perth market, some
hard to
see how the
believe.
growth, how that's gone over the year, over the last
Yeah,
12 months compared to sort of your Melbourne, Sydney markets. It's just going from strength to strength.
yeah, I mean, I think Perth is a funny market because it depends on what's going on in the mining sector and commodities. It usually goes well when how commodities are being exported aggressively and commodities have gone up in price as well. And we're seeing that in terms of that sector. So year on year, 24.3% as the end of March for Perth. But then, you look around Australia, you look at a lot of other capital cities. So like we look at Brisbane, including the Gold Coast, 17.7%. God, that's strong. Um, the Brisbane market alone, 19.1. Darwin, 19.7. I'm not really recommending anyone invest in Darwin, to be honest, but it's thriving at the moment. Canberra, 6.1, so modest. Hobart, 7.8. Sydney, 4.8. Melbourne, 3.4. Those markets are slowing right down right about now. They're actually in negative for the month-on-month change, negative 0.1 and negative 0.2% there. Whereas most other capital cities and even regional capitals, such as your Gold Coast market, where I am, all in positive territory on that month-on-month change. Um, so I just wonder how much of an impact do you think these interest rate increases are going to have on those markets, which just seem to be running at double digits at the moment? Surely it's going to slow it down.
Yes, and I think for Sydney, the I guess the affordability. So with higher interest rates and higher cost of living in Sydney, that's just starting to pull back on that average price in some of those areas. I
Mm.
think Melbourne still the same issue. They've got a lot of sort of state tax issues that's dragging that back. I still think some of those suburbs in Brisbane, and you can probably speak to this, they
Yep.
are becoming quite expensive. So I'd imagine some of those
Yep.
start to pull back as well, just through those same fundamentals, right? High interest rates are going to start to drag on those borrowers.
Yeah, there are certainly some like premium suburbs like Paddington, Hamilton, or a few others on the north side of the river, the Brown Snake, which you're starting to see like some of the really high-end luxury builds, over 5, 6, 7 million if it's quite a good size block, 1,000 square meter block, which is a big piece of land in the heart of the city in Brisbane. Um, they're certainly going up, but I agree, like there's less stock turnover with those levels. You sort of then start to look at properties or even like duplexes or apartments, like sort of your sky homes throughout the city, which are still attracting significant prices. But I think as interest rates do come down, you'll see it come off a bit. But I don't know, Southeast Queensland's a funny market at the moment. We're seeing a lot of net migration here still for the
Yep.
lifestyle and the weather. We've got the Olympics on the horizon, so that's driving a bit of capital growth given all the public infrastructure that's coming from that. So I would say Southeast Queensland, I still think steady growth, your 5 to 9% annually.
Yep.
But I think a lot of other regions will continue to do that. I like speaking to buyers agents, we are starting to see it move to a bit more of a buyer's market where vendors, because their house is sitting for sale for longer now. It's, 45 to 60 days. They're willing to take a vendor discount, which is usually sort of what they're, if they've set a price at 1.6, they're sort of starting to look at taking a 1.55 or 1.5
Yep.
now just to offload it. So we are actually starting to see that a bit now, which is good to see. So if you're in the market for investing, engage a buyer's agent, get a pre-approval, look at locking in and good, obviously building a good asset profile there within a suburb or a capital city, because there are starting to see some good purchases come off. And as interest rates go up, you actually might even start to see you investors already or even first home buyers under a bit of financial stress as well.
Yeah. Yeah. I mean, I just had a client that went to an auction in Kyle Bay, which is a really nice suburb in Sydney. And the agent was guiding $4 million. This beautiful double fronted, like great overlooking the water.
Mm.
And it went to auction. It sold for 5.2 million.
Wow. Yeah, wow.
So, quality, blue chip, good area, great location, looking over the water, sold well above their expectations. So there's still, I think in Sydney for the right property, it's still moving.
I hate that guidance that they can do for auctions in Sydney, in New South Wales. Like they can't do it here in Queensland. They can give you comparables, but if you ask them the questions like, oh, what do you think it's going
Yeah.
to go for? Well, legally, an agent is not allowed to say anything. They cannot give you a price guide for an auction, but they can down in New South Wales, and there's always underpricing. And I feel like New South Wales is just right with it, where they get a lot of investors there that think they're on the money and in the market.
Yeah.
They'll price it up at 3 million, but it's going to sell for 5. But they get
Mm.
you there, those lower bidders to start the bidding, and then it goes just through the roof. And then a lot of bidders are angry and disappointed because the agents just brought them all there for no reason, wasted
Yeah.
all their time, which is, yeah, pretty rife down in New South Wales, unfortunately. What do we think this sort of translates to, I guess, the next 12 months? Assuming we've got, say, 2 more interest rates, I would say the market will come off a bit. It'll
Mhm.
cool, but I still think there's going to be capital growth there.
Yeah. I mean, for definitely for the right, fundamentals of the property, good good supply and demand. There's going to be certain property assets classes that may not do well. So, some apartments, but I think that's more a function of supply and demand and sort of
Yep.
how many is available in that area.
Yep.
But if you're saying another 2, that's 4 for the year. That's
Yep.
going to take off people's borrowing capacity by sort of 12 to 16%. And of
Yep.
course, with the banks implementing your HEM, your
Yep.
baseline living expenses, that has been recalculated and that comes out every quarter. So,
Yep.
between the two, and that has jumped up. I've seen for some families, they're saying, well, because of your income, because it's income based, we're assuming a minimum living expense of say $10,000 on that application.
Mm.
So between that and you may only be spending sort of $6,000, $7,000, outside of your home expense,
Yep.
but the banks will take that and then they start to pull apart a lot of your costs. They'll say, your health insurance, we don't deem that as part of that. That's a separate expense. So all of
Yep.
that reduces your borrowing capacity. So,
Mm.
for some borrowers from the start of the year to the end, that may mean 18 to 20% reduction in borrowing capacity with some banks. So that
Wow.
has to have an impact on their ability to access credit and then their ability to kind of purchase that next property, which will
Mm.
tie into some of that growth.
Yeah, and actually that probably leads and ties in well to some of these questions that we've received for today. And I might throw them your way, unpack it a
Yep.
little bit. First question, um, with rates at 4.10% and potentially heading to 4.35% in May, should I fix my rate or stay variable? Good question.
Yeah, I mean, look, it always comes down to your own personal goals. So we
Mm,
need to unpack that a little bit. I think people, like mortgages are a 30-year tool. So don't think about just the next 6 months only. Think about at least the next couple of years for yourself and your family. And what
yep.
do you want? Like, what are your goals? And then work backwards from that. If it is that you just want to lock in your repayment, then have a look at the fixed rates. As I said before, 6.5% to lock it in now for a lot of these banks. Are you happy with that repayment, or are you happy to ride the variable
Yep.
train? And, maybe it's a little bit cheaper now, but it may go up, it may stay the same.
That's right. And I think if you want some certainty, maybe lock in a percentage,
Correct.
fix a
Yep.
percentage. That way, great, that's not changing in terms of cash flow requirements. This side can go up or down. It's likely to go up for the next sort of 12 to 18 months, but then it might come down. So if you're looking into a 3 or 5 year, at least the 3 or 5 year, that's definitely not going to change, but your
Yep.
variable will.
And just on that, I think people see rates when you actually break it down and say, okay, if it does go up, that's going to cost you an extra $100 a fortnight. People go, yeah, okay, that's
I
not the end
can,
of the world.
yeah, I can weather that within my cash flow. That's right.
Exactly, exactly.
Yep. All right, good question there. Next question. I'm living in the UAE and I'm paid in dirhams. How does my currency impact or affect what I can borrow? Another good
Yeah,
question.
definitely. Most obviously all the bet we'll have to convert that to Australian dollars, and this is probably where you can jump in. But
Yep.
the Australian dollar strengthened over the last 12 months, correct, against the USD?
It
Yes or
has,
no?
yeah, it certainly has, but it's actually pulled back recently because of the
Okay.
US conflict, which is trading at 69 cents. But if the Middle East conflict wasn't happening right now, I could almost guarantee we'd probably be looking at 73 cents. So
73.
yeah, and the expectation is that the Australian dollar will strengthen pretty
Okay.
quickly off the back of the Middle East conflict. So, if anyone listening, if you're sitting on US dollars and you're like, umming and ahhing as to whether to pull the trigger and convert it to AUD, you should do it soon. I wouldn't sit on that for too long. But forecasting it out, the dirham will get weaker against the Australian dollar over the coming
Yep.
years because
Because
it's
that's
pegged to the US dollar.
pegged to the USD. Yep. So and a lot of those currencies in the Middle East sort of move in sync with how the Aussie and the USD trades, right? So
Yep.
the banks will look at this more at just a spot rate. So
Yep.
where it is today, or some banks may take like a 30-day average. It's pretty much what's the strength of the trading currencies today. And then we'll just convert that across into Aussie dollars. And then depending on the bank, they'll shade that back. Well, most will take 20% off for that FX risk.
Hmm.
And then we'll look at that. What's your income in Aussie terms, and use that for servicing. Could be at a gross level or at a net level. That's really comes down to that bank's credit policy. And so we'll just use that for your borrowing capacity. So there,
Yep.
there is a haircut you'll take with most banks, but I think that's more just to realistically capture some of this FX movements, right, that we've been seeing. So it is sort of right what the banks are doing.
Yep. Yep. Absolutely. Question here about the fuel excise cut. I feel like we've answered this, but I'll just read it out just in case we haven't. Fuel excise cut. Does this mean inflation is coming down and rate cuts are coming?
Yeah, so you got your headline inflation and then you're trimmed. So the RBA will be looking at the trimmed inflation as sort of like a bit more of an average
Yep.
for their decisions.
Yep.
Yeah, we did answer this earlier. I mean, as I said earlier, I'm putting my neck out there. I think there may be some cuts later in the year. James is completely a no, but I get this. Everything
That's
that's happening right now is just COVID 2.0. You know, sub out the everyone was glued to the TV watching what was it, the infection numbers, sub that out, sub in the petrol
yeah.
prices, there's all these.
Yeah.
Anyway, I could.
It's different. It's a little bit different now. We've got a bit of stagflations, but I'd be surprised if we get rate cuts this year. I'm forecasting rate cuts 2028. So
2028. Okay,
yeah, yeah,
interesting.
Yeah.
We'll have to
So
bookmark these.
yeah, well, I'm happy to, mate. We'll put a carton on it. That sounds good for our
If we can
listeners. So
afford it at 2020.
Um, but that sounds good. All right, next question here. I'm returning to Australia in 12 months. Should I buy now as an expat or wait until I'm a resident? Um, God, there's a lot we could unpack in that question
Oh,
in
so
terms of
much.
in
I
terms
know
of the
Ben's
type of
doing
purchase as
work around
well.
this, around
Yep.
tax residency, around there's a lot. I mean, this is probably moving every couple of weeks. This whole,
Yeah. I think for this question specifically, I mean, if it's an investment property, like you don't need to wait. Like you can buy it
no,
now. If you're just buying, and when you're buying, you're both Australian citizens, um, that's fine. If one of you is a permanent resident and the other one's an Australian citizen, just check the state rules around stamp duty. If you're one of
yep,
them's treated as a foreign acquirer, if you're a foreign resident and you don't actually have a visa here and you're buying, then you just need to be careful because you will get smacked with extra additional stamp duty and land tax as well when you're holding it.
yep.
And if it's a main residence, gosh, it's a tough one. It's rare that I see too many people successfully buy a main residence now, come back to Australia, move into it, and they say to me, "We're really happy with our purchase. This neighborhood is great. This is
Yeah,
what we expected. This is where my job is. We don't want to move."
yeah,
Um, so if you're buying and it's a main residence, it's sensible just to be patient and maybe wait until you're back, rent for a period, then buy. Had a client buy a property in Sydney. It's probably about an hour out of Sydney, the city, worth about 8.5 mil. The stamp duty on that alone would have been probably 400,000. They've lived there for about 8 months, and they've sort of told me, wish we bought somewhere else, but now we can't really do
wow,
anything until the growth of the property at least outweighs the stamp duty because it's one of those assets which won't turn over quickly either. So that's an example on the higher spectrum where just not happy with the area, the neighborhood, even though sort of they thought they'd done really good research in terms of the lifestyle that it gave them, but now they think they actually need to be closer to the city, so they're just not comfortable. But they know that they can't do anything. They're sort of landlocked there, so they might even rent out the property and move into the city and rent in the city for the time being. So,
rent vesting.
yeah, so that's an extreme example. But
Yep,
I think if it's a main residence, it can pay to be patient. And if it's just an investment, then there's no time like now buying.
yep, 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 yep. Makes
Good
sense.
question. I heard foreign buyers are banned from buying established homes. Does that apply to me as an Australian citizen overseas? Kick
No,
this one over to you, mate.
no, no, no. There's a lot. I mean, there's a lot of confusion out there. A lot of fear mongering you see about this. No, if you're a citizen overseas, obviously you're a non-tax resident, assuming.
Yep.
So this doesn't apply to you. So you're
Yep.
fine. You're fine to transact and buy any type of property you want. Land, new builds, established, construct, whatever you'd like, you can do that. The only real restriction is buying in a self-managed super fund because that can cause some issues
Yep.
around the management of that self-managed super fund. But no, if it's in your personal name or you want to buy in a company in Australia, that's fine. Play on.
Yep. Absolutely. That was our last question today. So thanks for tuning in for another episode. Keep an eye on the next RBA decision. That's forthcoming. That's in May, and then we'll have the budget. But we are going to be in Singapore in the coming weeks for our masterclass. We're sort of every year right now we're getting around to different places in the world where Australians live and work and doing these masterclasses. Singapore is next cab off the rank. So it's great. We've got some great registrations already, but I find that the best thing about these masterclasses is firstly, it's great networking opportunity, as well as the Q&A at the end that gets asked. It's often a question that you might already have,
Mhm.
but someone else is asking it. But we often find Q&A at these events can go for an hour, sometimes up to 2 hours. So get there, come and eat some food and drinks, catch up with us, get your questions answered. Hopefully you walk away feeling empowered and informed on how you can manage your finances going forward.
Yep. Yep. Looking forward to it. Looking forward to seeing Singapore.
Beautiful. All right, guys. Thanks for tuning in on the episode. See you on the next one. Thanks, mate.
Thanks, James. Thanks, guys.